All right, everything looking good. Time to get this party started. All right, and we're live. Welcome back to the channel. It is Wednesday, August 11th, 2021, 8 o'clock p.m. Eastern Standard Time. And before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so we got quite a bit to talk about here. Tons of action in these markets. Traditional markets continuing to melt up, but giving us some very interesting signs. Crypto obviously melting up as well. The entire community is screaming about new targets, price targets, $250,000 Bitcoin, $10,000 Ethereum. Cardano's going to take over the world. Let's talk about what's really going on. We got a nice move up on the 10-year Treasury, and obviously losing a little bit of that, giving a little bit back. Let's talk about where that's going. And of course, the DXY, the dollar has officially gone to zero. I was wrong about everything. Everyone else was right. The dollar is officially worth nothing and has lost its world reserve currency status. I was wrong. Not. So yeah, let's take a look at what's going on here, and we will get rolling. Okay. So yeah, we'll start with the 10-year Treasury and have a look. Once again, like always, it is important to zoom out and get an idea of the big picture. So just to kind of take a look here right off the bat, just to see what's going on. We are bouncing this area here, which we called out the bottom based on our key Fibonacci support level. At that point in time, we now have busted back above the 200 exponential and simple moving averages. So if we turn off our drawing tools, we can see here on the daily that we basically started carving out a bottom back here, came up and retested the 200 exponential in bright blue here and the 200 simple, the darker blue here, at which point in time we went on a little parabolic run, little mini parabola, came back down and retested those levels. We did fall slightly through those levels, but we'll notice that something very important happened, and this is a key part of my personal trading strategy. What we want to see happen is the slope on these things maintain or remain positive. So it's perfectly fine to come down to them. It's perfectly fine to break down below them. The main interest point, what I like to pay attention to, what I use to determine trend, is the angle or the slope of those moving averages. So we'll see here the 200 simple moving average has maintained a positive slope the entire time. The 200 simple moving average, exponential moving average, lost its slope here for a moment, lost its slope here, and now we have regained that slope as well. So when we came back down, what did we do? We retested that area as support, and now we'll notice here as well, the 8, which is purple right here, and the 21, which is red right here, are now about to cross right here. As a matter of fact, they've already confirmed that cross. So tomorrow when the markets open, we will notice that the most important thing has happened. We are at a key inflection point, as we will have the 8 and 21 will both turn green and cross to the upside, telling us that we have a short-term positive trend on the daily. And then we will also have the bright blue and the dark blue as well, all angled to the upside and crossed where they should be crossed. So we will actually have, for the first time since back here, all 4 of those in the correct direction. So if we look at the previous time when that happened, we can see here we had the purple and red, the 8 and 21 were crossed to the downside. Here they crossed green, but we never had the 200 simple and 200 exponential cross to the upside. So then here we crossed the 200 exponential slope positive, and then finally here we get the confirmation on the 200 simple. And then after that run right there, we went on a nice move up to the upside. Again, because we're looking at bond yields, it's not going to be like life-changing percentages or anything, but it resulted in a 77% move in the 10-year Treasury yield, the TNX. So if we get a similar type move, this time around, what would that take us up to? Somewhere around like that 2.5%, which is basically enough to completely change the dynamic of the markets currently. So we'll notice here we are also in a position that the TJD TDMACD is potentially going to be crossing over the 0 line right here. We have multiple green histograms in a row. We're well above the slope line here, and the slope line is getting ready to flip over blue. So what does that tell me? It tells me we're about to go into a daily trend to the upside on the TJD TDMACD, the Traders Dynamic TDMACD. And then also here we have very powerful trend to the upside. Our blue stochastic did exactly what we said. After we got the cross here, exiting the bearish control zone, we got the hard buy signal in bright blue. We then proceeded to the upside, came back down. It looked like we were about to cross negative. We bounced the purple stochastic exactly as expected and predicted, and then after that we continued going absolutely parabolic. We now have the knife sticking straight up in the air, the blue and the purple right behind it, telling us once again that the daily uptrend is strengthening to the upside, and we're very close to entering into the bullish control zone. So what is that telling us? Well, let's look at the big picture here. Big picture on the daily, we're obviously in a downtrend. We're just nonstop going down. So the majority of the time, these are red in the background here, and we're clearly going down, and then we're getting relief rally bounces to the upside. So the last time we got our little relief rally bounce here, we came back down, broke through the 200 exponential and simple, and then we continue to the upside. And then here we'll notice the same thing coming down to the downside. We broke up above them once again and then broke down below them. And again, we lost that slope for a moment and then continued to the upside. And now here, once again, went into and did the exact same thing. And now we have crossed them back to the downside, and now we're about to cross them all to the upside as we just discussed. So once again, everyone else getting completely faked out by what's taking place in these markets, and we have been literally ahead of the game this entire time. So now if we flip over to the weekly, we get a much more accurate picture as to what's taking place. Clearly a very strong downtrend going back to the 1980s, all the way down to essentially zero. The bond yields got down to 0.398%, so less than 1%. And now let's think about this for a minute, because I keep hearing people that are smarter than they sound. Yeah, I think these people are smarter than they sound because they're saying dumbass shit, and it's because they don't understand it. And that's where some of this confusion is coming from in these space. Okay, the Fed funds rate, they actually set that. That's something that the Federal Reserve can control. The 10-year Treasury bonds and the yield of those bonds is determined by the price of the bonds in relation to the preset coupon rate or the preset interest rate that they provide to you. So if you buy a 10-year Treasury bond, let's say, for $100, and it offers you a 1% interest rate, if the price of the bond goes up, the rate actually doesn't change. The rate only changes because the price is higher. The bond is locked in at that percentage the entire time throughout its duration, and the price is the only thing that changes, and then the price in relation to the predefined interest rate that that bond provides is what changes. So if the bond is $100 and then the bond goes up to $200, someone is selling it to another speculator for twice the price. The actual yield percentage on that bond does not change. It only changes in relation to the purchase price. So if the purchase price is twice as much, it's very easy to calculate that the percentage you would gain on the purchase price is half as much as if you initially bought it for the price it was offered at. So what does that mean? It means that real yields on a bond can go negative, but the interest rate on a bond cannot go negative. People are talking about negative interest rates on a 10-year Treasury. They're confused. They're talking about negative real rates because inflation is higher than the percentage that you're getting on the bond based on either its issuance price or the price that you're paying for it in relation to the locked-in interest rate that it offers to you. The actual real rate can go negative, but the coupon rate cannot go negative. If the bond price is $100 and it offers you 1% interest, just for this example, and then the price goes up to $200, the 1% interest is just 0.5% of the purchase price of the bond. So if the bond then doubles again and it goes up to $400 now, the percentage again would just be halved. So instead of getting now 0.5% on the purchase price of $200, you would be getting 0.25% on the purchase price of $400. So if you continue to double the price of the bond and half the interest rate, at no point ever does the interest rate that that bond offers go to zero or negative. Never. It never goes negative. It only, as a real rate, in comparison to inflation offers you a negative rate of return because inflation is outpacing the percentage that you're gaining. Therefore, you're losing purchasing power on that bond. Therefore, it's not an intelligent investment at that price if you're looking for the yield. But the actual percentage that the bond offers you does not go negative. So hopefully you're not listening to these dumbass people that are saying that bond rates are going to go negative, or they just don't understand there's a difference between a real rate and the actual rate that it's offered. But you know, it's a parabola, so as the price goes parabolic to the upside, the yield goes parabolic to the downside, but never actually reaches zero. Only when you're taking into account real yield does that happen. So I'm sure you guys all know this because you're not morons like all these people out here, but I just noticed that there are like people that I respect as like analysts or influencers or whatever that apparently just don't understand stuff because they're saying dumbass shit that does not make sense. So there's your rant to get us started for today, or one of many, I'm sure. Here, if we look at the weekly, we get a bigger picture though. Obviously the rates are going, you know, they're going extremely low here, as bonds have been in what amounts to, you know, a 40-year rally to the upside. Since the 1980s, rates have been going down, bonds have been going up. Here we can see, obviously, when we came up here, we retested or tested the 8 moving average, got rejected off the 8, and then started selling off to the downside. I'm sorry, that's our 200. The color makes it easy, but also makes it difficult. So that is our 200 exponential, I'm sorry, here in red. And then once the 821 crossed to the upside, we started going up, and then we got rejected at the 200 exponential. Now what we're potentially putting in is that inverted head and shoulders pattern here. So the real question is, do we carve out the left shoulder, come up, put in a neckline, and then we have our head down here, and then we have our neckline again, and now we've carved out the right shoulder? Well, there's definitely a possibility of that. What we need to pay attention to is, do these things continue to rally to the upside? But we'll see here very clearly on the weekly, you know, everything is still angled to the downside and negative at the time. We also have all red histograms on the weekly. We do still have a positive slope, but we are well below the zero line and well below the slope level. So if we stay below it long enough, it's going to flip over red. And then we'll notice also we are very clearly inside of the bearish control zone. While the blue stochastic has angled to the upside and is trying to exit the bearish control zone now, we're still a ways away from the purple to be able to get that cross back to the upside. So, you know, right now, the momentum, and again, it's very important to understand that these are lagging indicator oscillators. So they lag behind. They don't tell us what's going to happen. They tell us what's happening based on momentum afterwards. So is it possible we continue to just sell off here? 100% invalidate the inverted head and shoulders. Bond prices continue to go up. But that does not look likely to me based on a lot of things we've discussed here. So it's very clear, obviously, that we came up here and broke through a clear resistance level right here. It was previously support. Once we lost it as support after these 3 tests here, we broke down and went, you know, down to our lowest price ever or yield ever. And then we came back up, broke through it, but we're unable to maintain that level. And now we have bounced, we're come back up, and now we're retesting what was support. It's now resistance. So is it possible we just get rejected here and continue back down? It 100% is possible. What we're paying attention to, though, is when we left the bearish control zone on the monthly here, we got the hard buy signal and came all the way up. We're now about to enter into the bullish control zone. The bulls have very clearly been in control on bonds, and they're about to take over full control once we enter into the bullish control zone. So if that happens, I think it's very likely we get the measure move back up, test the 200 exponential and simple moving averages, and most likely get rejected. But, you know, again, regardless, we'll have to wait and see what happens at that time. The most important thing we're paying attention to is what happens with this shoulder. Does this get carved out and go, you know, basically put on the squeeze? Because if these rates start to shoot up all of a sudden, that is going to cause bond prices, or the inverse obviously will happen to the bond prices themselves. They will start to capitulate, and then you'll have to have all these long bond purchasers cover, you know, which obviously the inverse relationship between the two is the same. You know, what causes one causes the other, but reverse. So you know, there's definitely a inflection point taking place, but based on what we're looking at on this chart here, the bulls are very clearly in control of yields, which means they're losing control of bond prices. And then very clearly we have a bunch of green histograms in a row. We are about to cross over the zero line on the TJD, TDMACD, and all these green histograms have led us above our slope line, which is getting ready to roll back over to the upside, flip over blue, and then obviously, you know, that would correspond with us getting this breakout of the yields. So the time to be bearish on the treasury yield was a long time ago and up here when we broke down from that key level. It is not now, once we're now flipping our short term, and then clearly our long term time frames are both very clearly in control of the bulls on the yields. So let's look at the actual bond chart. Just to kind of put this all into perspective, once again, you know, we very clearly have our left shoulder, our head, and then our right shoulder. What is that telling us? Well, the potential of this being a head and shoulders pattern. So what is taking place here? Well, we were in a very powerful uptrend on the bond prices since, and again, this is the TLT 20-year Treasury bonds. This was December 2018. We went absolutely parabolic. We had the scare doing the CVD. Obviously, bond prices went absolutely parabolic. That corresponds with yields going to basically zero, because as the bond prices increased massively, the percentage that you got based on that purchase price of the yield drove it down to almost nothing. So bond prices went through the roof. So the yield that you got on that bond went extremely low because you paid so much for the bond, not because the actual rate that you got on the treasury changed, but because the price that you paid for it changed. So then obviously we came up here, put in a double top, and then that failed. We broke down inside of our trend and we lost the 200 exponential and simple moving averages. So when they bottomed out here, we put in a very clear double bottom and we expected a retrace of the bond prices. So at that point in time, we take the Fibonacci from the head down to the neckline here, and then we got just shy of a 50% retracement. What does that mean? From the top here to the bottom here, we bounce back up about 50% of that move, just shy of 50% of that move. It's looking now like we are topping this out and getting ready to push back to the downside, but we are very close here to crossing the 200 exponential and simple back to the upside. So if we maintain price action here long enough, these can cross back to the upside. But if we get rejected right here, the head and shoulders plays out, we come back down, test the neckline, etc. So we're at an inflection point, the same way that crypto or Bitcoin is at an inflection point with its 200 exponential and simple moving averages. We see treasuries and you know, the yield on those treasuries doing the exact same thing at an inflection point, trying to decide right now what direction is the trend going to continue in. So, and if we zoom out here, obviously we can kind of get a, well, let's look down here at our indicator oscillators. We very clearly put in quite a bit of bearish divergence between these points as we were putting in higher and higher, but we were putting in lower and lower points on our stochastics. And then here, obviously, as well, you know, we had a very clear, powerful uptrend from the bottom here all the way to the top here. We now have our histograms, a bunch of reds in a row, clearly below the slope line. The slope is getting ready to roll over red to the downside. We're getting ready to cross over the 0 point. So more than likely what it looks like is happening is we overshot the 200 exponential and simple and moving average, tried to hold it as support, and it has failed. And now we're going to see that rejection play back out and the right shoulder be confirmed, come down here, and then we'll have to wait to see, do we break through the neckline or do we invalidate this head and shoulders pattern? Either one is easily and clearly a possibility, but we do expect at least a retest of the heart line of the channel, and also potentially coming back down to our green parabolic support line, coming back to like literally 2000. So we're very clearly inside of this blue channel. We broke out to the upside, could not maintain the top of the channel, broke down from it, attempted to break back up to the top of the channel again, but we failed to do so. So now we have a high, we have a pretty clear lower high at this point in time. We'll have to wait and see how does that play out, but probably something similar to this, where we eventually break down to the heart line and then probably through it. But I would expect us to come down somewhere near our green parabolic trend line here. So could we easily break through it and get down as low as, like, you know, the 120s on bond prices? We definitely could. But I would expect at least to move back down to the heart line based on what we're seeing here on the weekly chart of like 133. So, you know, and again, that would be longs covering. They're obviously long, and then all of a sudden price starts moving against them. So they start selling their bonds off. In the meantime, obviously, the treasury is the the Federal Reserve is swooping up as many bonds as they can get their hands on. Their grubby little mitts are trying to prop up this market right here, as foreign investors are also running to bonds, but they can't buy them fast enough because there are more sellers than buyers, which is why we're seeing this trend to the downside. So we're still in an overall macro uptrend, but we are down here losing essentially the power of the trend to the upside, as we were going parabolic from 2018 to our top back here in 2020, and now we are very clearly selling off or retracing a portion of that move. So if we want to look at that based on our Fibonacci levels, and we just take a Fibonacci retracement from our bottom right here to our top of the head up here, we'll see that when we came down initially, we bounced perfectly on the 618 level, and that is in fact our neckline that we're paying attention to. We bounced all the way back up to the 382 on the weekly, got rejected at the 382. That is a 2 fib level bounce from the 618 past the 0.5 to the 382. That is what we expect. So what we want to see is what happens when we come back down to the 0.5 at like the low 140 range. If that holds, maybe we come back up here and we retest the top of the range, and we inversely get the retest of the 618 in yellow and the 236 in green. Or if what we're expecting to happen takes place, we come back down here, retest the 200 exponential and simple moving average, come back down to the heart line at the 618, and then if that fails, potentially get a move down to our next substantial fib level based on the move up, which we came down and did a 61.8% retracement of that move. The next target would be a 78.6% retracement of that move, and give us our target of like 124. So anywhere from 124 to like, 130 is essentially what I'm expecting to the downside. If we do find support right here and then continue to the upside, I think more likely than not, bonds will be retesting that $160 range. So, and then obviously this is getting ready to flip back over bullish. We're in the bullish control zone, powerfully moving to the upside, all green histograms, well above the red slope line. So again, this looks like it's getting ready to continue to the upside if it can maintain this move. And then finally, if we look at the monthly, it's telling us a very different story. We went absolutely parabolic to the upside, left the bullish control zone, got the hard sell signal at the absolute top, broke down, and now we're just about inside the bearish control zone. We are all red histograms, well below the slope itself, and the slope is getting ready to flip over red, and then we're also below the zero line. What does that tell us? It tells us that on the monthly chart, the bonds are in or going into a downtrend, a very clear downtrend. So we're looking for a break of key levels, which again, what does it look like if we turn off our drawing tools? It looks like essentially we had a confirmation hard sell, left the bullish control zone at the top here. We had more than 2 red histograms in a row. We broke down from the slope line and we're below the zero line. So all 3 of our indicators on the TJD, TDMACD are bearish. We have the hard sell signal and have left the bullish control zone. That is obviously bearish. The final one is entering into the bearish control zone. And then finally on the shorter time frames of our slope line here as well, we had the 821 cross to the downside. We bounced, tried to come back up and save that slope. We are finding temporary support at the 8 moving average, but it has failed. We have gotten the confirmation of the cross, and depending on what happens here, we would expect continuation to the downside. This looks like a dead cat bounce or the right shoulder of our head and shoulders, which will lead to eventually a retest of the 200 exponential and simple on the monthly, potentially of a target as low as like $115. So that's what I'm looking at. That's why it's important to look at the different time frames, as right now our daily, our weekly, and our monthly are not completely agreeing with us. So obviously the longest time frame will have the highest priority, but the shorter time frame is the most reactive, and then the middle time frame will be somewhere in between. So we have bullish, bearish, bullish, or bullish, bearish, bullish, bullish, bearish, bearish, bullish, yeah, okay. So we have the actual bonds themselves doing one thing on the daily and also that same thing on the monthly, and then on the weekly they're doing the opposite, and then obviously the yields themselves are doing the opposite, yeah, on the same time frames but different, but still same. Yeah, so hopefully I confused everyone with that one, as I think I have confused myself. So, but you know what I'm talking about. Yeah, so that's our bonds. So yeah, the dollar did officially go to zero, like everyone's been predicting forever. It lost its world reserve status. I was wrong, obviously. Okay, enough joking. What's really taking place here? Well, exactly what we said. We went bullish on this. We're moving to the upside now. We have to wait and see what takes place. Wait, did we already look at the dollar? No, we didn't. We looked at the yields and the treasuries. Okay. Yeah, see, sorry, it's been a long week. Been working on this sweet indicator and officially published it to the crew. Yeah, dollar to the moon. Yeah, maybe not all the way to the moon, but definitely closer than where we're at right now. So we might not actually touch the moon, but I think we're going to get closer than where we're at right now to the moon. So technically, yes, dollar will be on its way to the moon, but fall short somewhere in between where it's at now and space. So if we look at the dollar DXY chart, we'll see obviously it went absolutely parabolic to the upside, dollar terms. You know, blasted off here up to like 102 and then sold off. We put in some bullish divergence here at the bottom. We had very clear slope line to the downside of the 200 exponential and simple. We had very clear slope line throughout the range of the 8 and 21. We started to carve out a bottom here, started to put in some divergence on longer time frames, and it looked very clearly like we were putting in a bottoming W pattern or an Adam and Eve pattern or a potential sloped like head and shoulders pattern, whatever you want to call it. We have now maintained long enough above the 200 exponential moving average that the slope is now positive. We have now confirmed as of today's close, you can see there's a tiny little spot right here that's blue now. So for the first time since May of 2020, the dollar is officially into an uptrend based on my own parameters, which is obviously what this indicator is designed to do, is make it very clear and easy to follow my trading plan for momentum and using moving averages to enter and exit positions based on shorter and longer time frames, and then also different moving average crosses as well as the slope line. So once we have a 200 exponential slope to the upside, once we have the 200 simple slope to the upside, and then we have an 8 and 21 cross to the upside, this looks absolutely, I mean, best case scenario. So on the daily here, we're at resistance, getting one cross with the 8 and 21 cross to the upside here, both turned green. We now are above the 200 exponential and the 200 simple, and both have a positive slope. So we're at an inflection point on the market. We're at resistance, but we're above our moving average support, and they're confirming momentum to the upside. We have basically gotten, you know, our oscillator has been trending to the downside here throughout this range. The stochastics have been trending to the downside throughout this range. We basically went sideways because we'll notice, look how high up. This is when I'm talking about a bullish reset. Look how high up our oscillator is right here, how high up our histograms are. And now look where they're at right now. And we have a blue slope that entire time. So we're below the slope line itself, but we basically just let this oscillator cool off. And then what happened in that same amount of time? Price action went sideways to up. So price action basically just went sideways. The oscillator came down. So now if this thing starts to take off to the upside, it has that entire range that it can go back up before it gets like parabolic to the upside and runs out of room. And then again, same thing with the stochastics here. We'll notice obviously back here, we were way up inside the bullish control zone. The stochastics sold off all the way to the bottom, nearly to the bearish control zone, bounced right before it entered the bearish control zone and crossed and give us the hard buy signal to the upside. So now if we look at where were the stochastics at here, they were almost maxed out. We were like up in the 80s, you know, essentially extremely high up. And then we came all the way back down to the 20s basically. But where was price action at in comparison? It basically is sideways. So while the oscillator indicators cooled off and went sideways, went down, the price action went sideways. So then when they're ready to move back to the upside, the price action can go parabolic, and then the indicator oscillators can correspond as well. And oftentimes this move will be preceded by a bearish divergence. So here we were putting in continual bearish divergence. Price action was constantly going up. We had a high, then we had a higher high, then we had a higher high. But here we have like a high, and then we're putting the lower highs on the oscillator. But price action basically goes like floats up, sells back off, finds support, and then immediately comes back to that level, and now it can see continuation. So, you know, think of it as a jet that was just flying, and while it was flying in the air, it was running out of gas. So it coasted down for a little bit, refueled with one of those little like refueling planes in the air, and now it's fueled back up so it can continue to fly to the upside. So that's what we're paying attention to, and obviously our indicator oscillators on the daily time frame are telling us the dollar is going to go stronger. This is obviously the opposite of what everyone else thinks, because there's millions and billions and trillions and gazillions of dollars, and there's going to be inflation, and everything's going to go to zero. You're not going to be able to afford anything, so hurry up and spend your dollars now. So what happened? Well, the government's basically tricked all the plebs, all the peons, all the peasants into spending all this money as quickly as they could, because they were afraid everything was going to cost more in the future. And now we see with these new inflation numbers, with the CPI prints, with everything going on, that this inflation is not going to last. So while transitory, according to Jay Powell, the actual inflation itself will not continue at the rate it was going to the upside, but it's unrealistic to think, based on supply chain constraints and lack of goods or services, that we will see the prices come back down. So what does that mean? Well, it means that everyone got tricked. The governments spent a bunch of money and tried to reflate the bubble as all the air was coming out of it. The world economy popped. All the air was coming out of the balloon. So they sat there and blew as much air back into the balloon as they could, but they were unable to actually inflate anything. All they did was just keep it from deflating faster. They reinflated the air that was leaking out of it as it was still leaking out, but they failed to actually get the bubble any bigger. The only thing that actually went bigger was asset prices, because people were afraid that those assets were going to cost more in the future. So they hurried up and spent all this fresh money that they printed into the economy out to buy all these things, to inflate up all these asset bubbles. And now, in actuality, in the future, it's not going to be the case. So we will probably see all these bubbles pop as everyone flees to try to get out of these markets of all these inflated real estate bubbles, crypto bubbles, stock market bubbles, all these different bubbles everywhere. Everyone's going to try to rush to the exits at the same time. And then what's going to happen? Well, we're going to see massive sell-off. So yes, we did go into basically we went into a recession, and we came out of the recession faster than ever. And now everything is higher in prices than it was going into the recession, because all these companies are in better shape, and sales are better, and their balance sheets are better, and the whole world's better, and GDP is better, and all this stuff. But the truth is, all they did was fudge all the numbers. If you take out all of the fresh money that they pumped into the system, GDPs are much, much lower than they were previously. If you took away all the money that you gave to these companies to put on their balance sheets and pay off their debts and, help them to get by, and all the stimulus you gave to all these businesses, if you took away all of that fake bullshit that they pumped into the economy, and then you actually look at those numbers, the world is much, much, much worse off than it was before. So what happens when you have giant holes inside of a balloon and you don't fix the holes? You just blow more air into the balloon faster than it's coming out. Well, eventually, when you stop blowing the air into the balloon, you never fix the holes in the balloon. So you just have more air in the balloon that's leaking out. So when you stop pushing it in or punching it in or blowing it up or whatever, all of a sudden it's just going to still deflate at the same rate, or probably even worse, because now you have stretched out the holes, so the air is going to leak out even faster. So we're going to end up back into another recession or a Great Depression, as essentially every time we pump more and more money into these markets, into these assets, into these bubbles to try to reflate them, to try to stop them from deflating, because that's really what's taking on here. There's massive amounts of deflation taking place because of policy, because of government policy, because of the control that they did. They shut all these businesses down, shut down the economies, because they were scared that everyone was going to die. And while they did that, they caused deflation to happen. So in order to stop the deflation from being evident and taking place in people's lives and crashing the entire world economy, they pumped out all this money. They pumped out all this currency, I should say, into these markets to try to reflate everything, to make it look like everything was fine, help people pay their debts, stop people from having to pay their debts, put money in people's pockets so they can go out and spend it. All this stuff they did was literally to just stop a depression. But the problem is, the more money they pump out, it goes parabolic, but the effect starts to just slowly wane. So the more money they're pumping in, that's why you hear before billions were a lot, now trillions are a lot, and then it's tens of trillions, and then it's hundreds of trillions, and then it's, I don't even know what comes next, gazillion, probably some other fake made up number. I don't even know what it is. But the fact of the matter is that they have to keep increasing these numbers to have the same or lessening of an effect, because it's like when you do, the heroin addict example is absolutely perfect. I wish I could take credit for it, but I can't remember who says it. Maybe Peter Schiff or something like that. God rest his soul. I'm sure he's dying with this gold action. But, essentially he says it's like monetary heroin, the stimulus is, or all this money printing. The first time you do drugs, you get super fucked up off a tiny little bit, or alcohol, or whatever you want to talk about. And then the next time you do it, it's less and less. And then when you start doing it every day, you got to do more and more. And then when you start doing it all day, every day, you got to do more and more and more and more. And then finally, after a while, you are an addict and you don't even get high anymore. You just don't go into withdrawals. You don't get sick. You don't die because you're still doing your heroin. So you don't even get the good effects anymore. All you do is just not get the bad effects, which in this case, the bad effect would be, death. So in order to stop the markets from dying, they're just going to keep injecting more and more heroin, which is causing all this to happen. But eventually, at some point in time, the heroin doesn't get the addict high anymore. So the whole system crashes, at which point in time, everyone has to settle all these debts, which is, everybody has to run to the dollar to pay these debts, et cetera, et cetera. You guys know my whole macro view on everything. So that's what I'm expecting to happen. That's how all this is going to happen in the actual trend of it. Is there inflation? Yes, there is some inflation in some things, mostly asset prices. So yes, you probably paid more for meat or a loaf of bread or something like that. But the fact of the matter is, do I think that that meat or that bread or whatever is going to come back to the price it used to be at? I don't know. I mean, who even cares? The fact of the matter is, we're ahead of the game on all this stuff. So if we can protect our principal and create wealth faster than these negative effects happen, none of it really matters. So that's what really matters, not how much you spent on a gallon of gas or a loaf of bread. The overall trend is what's important and where everything's going. And we are going into a macro deflationary environment and probably the equivalent of, or worse, Great Depression. So welcome to Hooverville, bitches. So if we look at our DXY chart on the weekly, we have a very clear downtrend, followed by a multi-year uptrend, followed by a multi-year downtrend, followed by a multi-year uptrend. And now what we're paying attention to is we have flipped over the 200 exponential and simple to the downside. So while I do think that the dollar is going to break out from this level, we have to pay attention to when we get back up to the 200 exponential and simple moving average, are we going to cross back above them, or are we going to get rejected and then continue to the downside? So according to everyone else in the entire world, the dollar is going to zero. So we're going to get rejected here and go back to the downside. But what I'm seeing is the opposite. I'm seeing this as a potential, bullish reset. So we went sideways for years while our indicator oscillators trended to the downside. So now we can continue lifting off. And it's not as evident on the weekly, but when we flip out to the monthly, that's when, we start to feel that blood flowing. You know what I'm saying? Start and get that thicky. All right, get excited, because look what's happening here. Okay, we have a chart going back to the 1980s, all right? And we have a very clear high, a lower high, and then a potential lower high here. We have a low, and then a much lower low right here. So we have a giant, essentially W pattern here with our neckline. Let's look at this real quick. Oh, God, what is happening? Let's turn that back off because I can't see anything. So essentially what happened here is, at some point in time, if we had older price action, because all right, so this is our 200 exponential and simple moving averages, but because they need 200 months to populate, they don't actually populate till here. So we know very clearly, obviously, if these were projected in time, that they would probably be something like this and then be, back up this way. So we had a brief little blip where we flipped them over blue and we went absolutely parabolic. And then when we failed, we then went into a long-term downtrend. So from when price action broke below the 200 exponential, and in this case the 200 simple was already angled to the downside because it's so much less reactionary, that was in March of 2003. So from March of 2003, the 200 exponential was in a downturn, and then it finally crossed back to the upside in August of 2014. So 11 years it was in a downtrend. The 200 simple, with the exception of a couple little blips along the way, was in a downtrend the whole time. And now we see the 200 simple has very clearly flipped back to the upside as of December 2019. And the 200 exponential is still to the upside. Price action is on top of the 200 exponential. So what does that tell me is about to happen? Well, looking at this chart, it tells me that for the first time in existence, the DXY is about to go into a uptrend, a parabolic uptrend. So do I think it all of a sudden is going to just forever go to the upside? No, it's a fiat currency. It's eventually going to be useless for sure. But what this chart is telling us is that before it becomes useless, it's going to go absolutely parabolic. It's going to go on a very powerful uptrend. And why is that? Well, because all this debt around the world is denominated in dollars. And in order to settle a debt, you have to get the dollars. You have to pay off your debt. So that's what's going to happen here. That's what I'm expecting, and that's what the chart is telling us. So while we see essentially during that period of time, look at how high up our histogram was, and we basically just went sideways to down for all that time. What was that? Back in 2015, if we look at our level right here where price action was the same, that was basically right here in January of 2015. So now here we are what, 6+ years later, 6.5 years later, roughly, and our price is at the same spot. But where's our indicators and oscillators? Well, this one is all the way at the bottom of the range. This one is all the way at the bottom of the range. So is this a giant bullish reset on the monthly? Well, we have already confirmed that we have exited the bearish control zone. We now have the hard buy signal, the highlight in green. The knife is powerfully angled to the upside. We're on top of the 200 exponential average, and it is sloped to the upside. We're on top of the 200 simple moving average, and it's sloped to the upside. We are above the 8 moving average, and we are finding resistance at the 21 moving average, which is the neckline of our double bottom right here. So literally everything, and then we have multiple green histograms still below the 0 line, and we have a red slope that we're below on the TJD TDMACD. So everything but our moving average cross right here is telling us this is bullish. This is completely bullish. And then here we have our first of 3 signs of bullishness. So on the monthly time frame here, it looks to me like we have refueled the jet and we are getting ready to go up here. Now, could we find resistance at 103 and that's our top, and this was all just a false alarm and then we saw back? Of course, anything is possible. But what this chart is telling us now is we're going into a multi-month parabolic trend to the upside. So if we were to extrapolate out the 200 exponential and simple moving averages for a similar move like this, we broke above them, came down below them, and then went to the upside afterwards. And if we look at from the bottom roughly to the top right here, the dollar went up about 30% in relation to the basket of currencies. So if we go from the bottom here or the bottom right here, and then we assume a roughly 30% move back to the upside, where's that going to take us? Up to like 116 roughly. And then if we turn back on our tools right here, we'll see that potentially what we're looking at is this channel to the downside, this channel to the downside for resistance up here. And then we're talking about a potential move back up to retest our top, which essentially what we're looking at is somewhere around like 111, 112, maybe a little wick overshoot to give us like that roughly 30% move. A retest of, let's look at our Fibonacci's from the all-time high right here to the all-time low. The initial one was a retest of the 886. You know, when we look back at it, we Jensaki it. And then here we bounce up, we come up to the next lowest fib level. So we retested the 886 from the 1. And now this time we would be basically testing the 786, also the top of the channel, also our extrapolated fib target based on our resistance and support levels. So this is our red box area. This is our target for the dollar. When is it going to get there? Who knows? Maybe it doesn't happen until 2033. But it sure is pointing in that direction. So, but that's enough of that. Let's get into our actual assets and take a look at what's going on here. But very clearly, we are up at resistance, finding resistance, eating through these sell orders. And if we stay here long enough, we're going to get that burst to the upside. We're going to get our bullish patterns playing out. The inverted head and shoulders, the double bottom, Adam and Eve, and then our measure move up. So, but obviously everything is pointing to the upside in favor of the dollar. So, except for the fundamentals. Fundamentals are bearish. It's going to 0 because belief. So yeah, let's take a look at, what do you guys want to do? Crypto first? Let's look at crypto first. I'm in the mood to crush everyone's hopes and dreams. Let's do that. Near orbit would be good as well. Yeah, for sure. Good to see you guys. New Pathway, Lazy Boy, CW. Appreciate y'all being here. All the silent observers, appreciate you guys as well. Make sure you say hi in the chat so I know you're there. Give you a little shout out on stream. Likes, subscribes, all that good stuff. Remember, this is not financial advice. Let's check out that crypto. So let's start with the good looking one, the good looking chart, the CME futures. We have reclaimed obviously the 200 exponential and 200 simple moving average, and we are strong and powerful and bullish to the upside. Did we just come back up here to try to like retest this key resistance? Maybe. You know, very clearly in the bullish control zone, very clearly have a blue slope. Everything is still angled to the upside and bullish on the daily. Looking at the weekly, what is taking place right now? Well, we went absolutely parabolic from back here at 8,100. You know, we entered into a bull trend and it was absolutely beautiful. And then we confirmed a downtrend at the cross back here at 44,000. We have now come back up and retested that cross. We are trying to cross the shorter term moving averages, the 8 and 21 on the weekly, back to the upside. We are very close to that taking place here. If we do cross them back to the upside, it's going to look good. We just have to be careful because this is like the cross to the upside, then the cross to the downside, then the cross to the upside for a lower high rejection, and then capitulation. So, you know, obviously we don't have a previous time we can look at, but that's what happened with the CVD dump when Bitcoin lost a shitload of value very quickly. And then obviously here on the weekly as well, we will notice we are very clearly down here in the bearish control zone, getting ready to cross the stochastics back to the upside, getting ready to switch back into bullish mode and go to the moon. But here we have a bunch of red histograms in a row. We have lost the blue slope line. It has flipped over red. We're below the zero line. We do have two green histograms in a row or more, which gives us our first signal for bullishness potentially to the upside. So if we continue in this direction, we get the cross, we cross here, and we cross over the zero here, and we start moving back to the upside. Everybody wins. Crypto goes to the moon, and everybody can move out of their parents' basement. But more than likely what's going to actually happen, well, probably going to get crushed. So we have three red histograms in a row. We have a hard sell signal on the monthly. We have one little green histogram reflex rally trying to save the 8 moving average. We are now back above the 8 moving average, but where are we at? Well, we're at resistance. We're at very clear resistance. 46,000 is the top of this candle from in February and the bottom of this candle from in March. And now here we are trying to get above that area and getting stopped. We still have 20 days left to try to do so. If we can get back up there, our next target to the upside is probably somewhere around 57,000. I'm sure we'll run into resistance at like 50K, etc. But based on the monthly, do I think that's going to happen? No, I do not. Here's why. So here is our Bitcoin daily chart. And like always, let me just crush everyone's spirits here before we move on to something else. So let's go back here to our previous bull run. So, okay, it's obvious that we have, excuse me, we have only a couple of bullish cycles in history. Each of those bullish cycles corresponds with a 4-year halving cycle, which Bitcoin is designed to obviously have bull runs and then bear runs and then continue up. So while we do see the prices correlated with traditional markets and other assets and classes along the way, the truth is Bitcoin is designed to operate on a 4-year cycle. So there's arguments that we have lengthening cycles and shortening cycles and this, that, and the other, but nobody gives a shit about any of that because there's no proof of any of it, because Bitcoin has literally just done the same thing all of its cycles so far. So until it does something different, all those arguments are total trash, and we're just going to use actual technicals and look at what's already happened to determine what's potentially going to happen. So no fundamentals, just technicals. So the last time we went on that bull run from Bitcoin's inception in basically 2010 up to our top here in December of 2013, we had basically a 3-year parabolic bull run, at which point in time we broke down below our 200 exponential and simple moving average. The 200 exponential flipped over red, acted as resistance. We put in a bottom. The 200 simple stayed blue the entire time. We came back up and retested the 200 simple, at which point in time we failed to break above it. We broke above it but could not maintain it, and then we capitulated. So let's look at what happened here. When we broke above it, and we already went over all this in the trade group, but let's just talk about it here publicly in case anybody missed it. We had a 6% move above the 200 simple moving average, and we maintained price up there. The initial poke up here, and then 1, 2, 3, 4, 5, 6, 7, 8, 9 days, and then we flipped it back over to the downside, and then we started to sell off. We had obviously a extended little cycle here where we tried to get above it, but never put in a higher high than that little 9-day push up here, that little 6%. And then eventually, the 200 exponential broke down, the 200 simple down, the 8 and 21 back to the downside, and then after that, everyone's hopes and dreams got crushed for roughly 1 year or so after that. But let's look at our percentage loss from the top of the cross right here to the bottom, 78% to the downside. And then if we look at from the actual peak to the bottom right here, 87% cross to the downside, and a little over 1 year, 406 bars, so about 1 year plus a little change. Okay, at which point in time we then went into our next bull run, went absolutely parabolic. That was the bull run when most people discovered or got into cryptocurrency, although some people obviously just got in this bull run. We did the exact same thing, came up here to a new high, came back down, and then look, we broke down to the 200 exponential and simple moving average, got a little double top right here, broke down from it again, came up retested the 200 simple moving average, flipped the 200 exponential moving average back over blue. After losing it here, we got rejected slightly before it, at which point in time we sold off, and then we lost the slope on the 200 simple, we lost the slope on the 200 exponential, and then we went into another perpetual downtrend. Could not ever get back above the 200 simple moving average, at which point in time we went sideways and then capitulated down to the downside. So let's look again. Obviously here we have 0 days spent above the 200 simple moving average and a 0% overshoot, but from that rejection there to the bottom, we got roughly a 69% move to the downside, and then from our absolute top, our peak, our below off top, we got a 84%. And then that was roughly 364 days. So exactly 1 year from the high to the low right there, as opposed to the previous time, which was 400 days. So 1 year and some change. And then again, 84% compared to our like 80 whatever percent. So roughly averaging 80 something percent to the downside and roughly averaging a 1 year bear market from the top. So now let's go into our next one. We did something different here that we didn't do in previous bull markets. We went on like a little mini bull run, and then obviously lost the slope here. So let's analyze this while we're looking at it. Lost the slope here on the 200 exponential, acted as resistance here. We came back, finally got back above the 200 simple moving average, flipped it back over blue, and then we lost it again. Did the same thing again one more time, and then put in a slightly higher high right here than the previous one, faked everyone out, and then we went into our CVD capitulation. So depending on how you want to look at this one, I would say we should look at this point right here, as that's when we essentially lost the 200 slope. We did spend a little longer above the 200 simple, and we did have a little bit bigger of a move. We had roughly 16% move above the 200 simple, and we spent 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days above it, at which point in time, we tried one more time, got above it, and, failed. So if we look at, once again, our percentages, from our top right here to our bottom right here, we had 62% to the downside. And then if we go from the actual top of our little mini bull market to the actual bottom right here, we sold off 72%, and it lasted for 261 days. So, a little bit shorter, obviously. So now let's go all the way back up here to what's taking place now and see if we see any patterns, any interesting things taking place. Well, let's see. Well, we topped out right here, and we then sold off, came down below our 200 exponential moving average. The 200 exponential moving average acted as resistance. Wait a minute. And then we got rejected. We came down here lower. We put in 3 drives of bullish divergence. We then got a reaction rally to the upside. We flipped the 200 exponential back over blue. We came up here and retested our 200 simple moving average. We broke above it. We have so far been on top of it for 4 days. Now we're all of a sudden bullish, and we're going to 100,000, 250,000, $1 million, $1 trillion. Bitcoin's going to take over the world, guys. We did it. Or alternatively, maybe we'll just do what we did every other time this exact scenario happened. The literal exact thing that's happening right now. Maybe that will happen one more time, just exactly the same way it happened all the previous times. So maybe what's about to happen is we're going to put in a lower high right here, and all the little bulltards are going to get crushed because they thought that we were going back into a bull run, into a new bull run, and going to $1 million. But in actuality, what's going to happen, we're going to spend probably somewhere between 6 and 15 days above the 200 simple moving average. And then eventually we're going to break down from it. We're going to flip this blue 200 exponential back over blue here, psych everyone out for a little bit, and then we're going to break back down to it. We'll see it acted as resistance here. We'll see this acted as resistance, but we broke above it. We tried to push it back to the upside. And now what's going to happen? We're going to get rejected. So what does that tell us is most likely going to happen based on actual technical analysis and our data points that we have here? It tells us roughly we're going to sell off now 80 something percent to the downside. So let's zoom out a little bit. Let's say roughly if we go down, let's start with the low range, 80%, it's going to take us back down to $12,582. Okay. If we go, maybe further down, like the 85, 86%, it's going to take us down to roughly $8,600. So let's call it right in the middle, roughly $10,000 to the downside is our target. And then based on our previous, time periods and our 4-year cycles, which is literally written into Bitcoin's code, let's assume that we're going to go basically sideways to down for the next 360 to 400 days. So let's call it 380 days, right smack in the middle. So that's going to mean that our bottom will probably be somewhere around May of 2022. So that would be our bottom. And where would our bottom be at? Roughly around $10,000. Now, the only problem with that, and what we have to actually worry about is that would be us doing something different. So we have done that one time here, we did it twice here, and then we had a little mini version of the same type of thing here, and now we went to the upside. So assuming that that was our top, this was our bottom, that was our top, this was our bottom, and this was our top, that's going to look a lot like a 5-wave Elliott wave structure, at which point in time, when we sold off from our top here, we did not touch our initial top, which this was obviously our first bull run. The second bull run we went on, we did not come near our previous top from that bull run. And then obviously now, if we're assuming this is just one 4-year cyclical bull run, which, you know, it is technically, and this was like a mini run inside of it. If this comes back down and we don't find support at our previous top or above it, it's going to be us doing something we've never done before, and our low would be lower than our previous all-time high, which would correspond also with Elliott wave theory, which would be a 5-wave structure to the upside, retraces a percentage of the first wave, that's our wave 2, a percentage of the third wave, that's our wave 4, and then a percentage of the fifth wave, that's our wave 5, and then the retracement of our fifth wave retracement is the initial A. We come back up and put in a B to the upside, and then we proceed to put in a C, which is a retracement of the complete 5-wave structure, not just the fifth wave itself. So let's still use technicals, you know, for now. If we start cruising back up here and we get above key resistance and all of a sudden we start just hanging out here and moving back to the upside, you know, maybe then we can get bullish. But for right now, it looks like we're doing exactly what we did every other time this has ever happened, based on technical analysis telling us that we are literally topping out right here. This was just bullish divergence playing out, and this was a dead cat bounce off of our low. We were oversold and could not break through these levels because there was no more sellers at these prices. So we moved back up to the upside, at which point in time now, if there's more sellers than buyers, we will continue to the downside, you know, for roughly some months and some percentages, and altcoins will get absolutely destroyed. So there's some technical analysis. Let's look at our weekly real quick, and then we'll take a quick break. Here on the weekly, finding support at 200, found support at 200, found support at 200. So what do we expect to happen this time? Us to find support somewhere around the 200. You know, previous bull markets, the top would be, you know, the top of the bull market, and also the 200 exponential moving average around 18 to 20,000. The 200 simple moving average roughly 16,000. Could we get a big wick that sticks out the bottom right here and takes us all the way down to like 10,000 or 12,000 or something like that? Yes, we definitely could. So we have to be very careful for that. We did enter into the bullish control zone and got a hard buy signal here before we got rejected. Here we entered in the bullish control zone, got a hard buy signal here. Could we potentially break back up, try to cross or temporarily cross these to the upside before we get rejected? And then it looks exactly like what we did all of our previous other times. Yep, sure does look like that's exactly what's happening right now. So let's focus on technicals and not over exuberance. A lot of the altcoins and the trades that we entered into, including Bitcoin, did over 20%, 40%. Some even did 100%. This is a trading channel. This is not a hodler channel. We don't just put our hand on our pants, grab hold of ourselves, and say, "To the moon!" It doesn't work like that. We are traders. We are going to go with the trend and what's actually happening on the charts and what has happened in the past. So with that, let's just, we'll take a look at the monthly real quick, and then we'll take a little break. So here we have the monthly chart, you know, topped out right here, come back down. Bear market was the actual bottom. The 821 cross was the actual bottom of the bear market. Here went parabolic, came back down. 821 cross was the actual bottom of the bear market right here. So assuming we put in a lower high right here, sell off, eventually we'll be looking for the 821 cross and potentially telling us that is the bottom of the bear market. But again, we have to be careful that we don't just retrace these 5 waves in this 5-wave structure. We left the bullish control zone. We have a hard sell signal. The previous time when we topped out, we left the bullish control zone and got a hard sell signal and never put in a new all-time high on that cycle. And then here, obviously, we left the bullish control zone and we would have put in a hard sell signal, except for the history doesn't go back far enough. And then we did the exact same thing at the bottom in the bearish control zone, hard buy signal, parabolic bull run, bearish control zone, hard buy signal, parabolic bull run. So what we'll be looking for is when we top out next time, the exact same thing to happen as it's happened every other time in the past. And then once more, the very final thing we will look at here before our little break, we did the exact same thing here, went parabolic, multiple red histograms in a row, couple green histograms, and then bear market. We went absolutely parabolic, straight up red histograms, bear market. We went absolutely mini parabolic here, multiple red histograms, and then bear market. Absolutely parabolic here, multiple green histograms followed by red histograms, a slight little touch of green right here, and then bear market. Or maybe not. But let's just assume what's happening over and over and over again in this market and every other market in existence throughout the entire world is probably going to happen again. That all of a sudden, Bitcoin is not going to just pick up steam once again, because here we had a ton of momentum pushing it up to new all-time highs. And then here we have lost our momentum. This is a dead cat bounce. We have gained a little bit of steam back to the upside. Let's not just assume all of a sudden we're going to have the most parabolic amount of momentum ever all of a sudden, and we're just going to do something we've never done before ever. And no, yeah, you get it. You get it. So yeah, let's take a quick break. I'll jump back and chat when I get back, and then we can keep rolling with our technical analysis on crypto and friends. All right, let's jump back in. If you are just tuning in or came in later, remember this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. Yeah, I think we got enough. We don't really need to do like all these other Bitcoin charts here. I guess we could just take a look at a couple obvious signs here. High, lower high on the MACD. High, lower high on the RSI. High, lower high on the stochastics. High, higher high on price action. So maybe it's just a bullish reset, but we have to be careful because there's very clearly some bearish divergence taking place on the daily. Maybe we continue up here and validate it, but we have to be very cautious as we are at a key resistance point right here. Again, we could easily float up. I was actually expecting us to get up slightly higher to hit a key Fibonacci level. But again, as far as I'm concerned, when you're in a predominantly bearish downtrend or a bearish, retracement, and then all of a sudden you get a bullish move, typically the bullish move will underperform. So, okay, let's go into Ethereum. Ethereum hit our target absolutely phenomenally to the upside. Basically topped out at the previous bottom right here, and key Fibonacci levels. So obviously we had previously determined God, this chart is so horrible. Let's just go back to it. Previously determined that as our key resistance level based on the longer time frames. Obviously, we had support right here, had support right here. We lost it, underperformed, back up here to just shy of the 618. So here we came up here and got rejected. Slightly above the 618, hanging on, much more bullish looking. But if we look at our indicators, here we'll see the stochastics are turned down and we're about to cross the blue and purple to the downside. Very clearly still inside the bullish control zone, but the initial cross right here will give us a hard sell signal. And then once we leave that bullish control zone is probably going to result in a massive, pouring over as we did at the absolute top right here. Again, we had flipped the slope back over blue and had all green histograms in a row. And now we're showing weakness at the top of the trend. Could we possibly still get another burst back up here to a lower high? We definitely could. It doesn't have to just roll over and go to zero. But at this point in time, there's plenty of things pointing us back down to the downside. So, while this was a predominantly, bearish descending triangle, there was enough bullish divergence taking place on enough of these assets that this move right here was not unexpected, and we were able to capitalize on that move. We are still well above the 200 exponential and simple on the daily, and we obviously have the 821 cross back to the upside. But what we're paying attention to is, do we just start to see distribution taking place on these levels and then break back down? And then when we do break that back down, is it just going to be a retracement of this move up here followed by continuation, or are we going to see, new lows be put into place? So, and then if we just the next key support level that we have is the previous all-time high back here if we do break down from our previous low right here. So I would expect us essentially to come back down to like that $1,300 or $1,400 range, which was obviously key here as well when we had that initial sell-off. Looks here on the weekly also. We came all the way down to the bearish control zone, bounced the bearish control zone, trying to push back to the upside. So we just have to pay attention to what's happening now. Price action moved back to the upside. The indicator oscillator has only moved slightly back to the upside. So could we gain enough momentum to just continue here to a new all-time high? Yes, we 100% could. And does this have to do what Bitcoin does? No, it does not. Ethereum could literally go to a new all-time high and Bitcoin could fail too. And that would not be unrealistic. Definitely possible. But at this point in time, Bitcoin is clearly controlling all these other cryptos. So. And then here we have a bunch of red histograms in a row. We have a couple green histograms. We come back up to our slope line, which is still blue. Typically when this happens, we come up to it and then it acts as resistance. We might poke slightly above it. We might, not quite get to it. In this case, we're exactly at it. Oftentimes this will get rejected and then we'll see red histograms start to come in on the weekly and continuation to the downside. A failure of these to cross back to the upside, a rejection at the cross, and then continuation inside of the bearish control zone. So at this point in time, Ethereum looks much stronger, but again, probably just going to do what Bitcoin does. The Ethereum Bitcoin chart, we have a descending channel. We have moved up to it, tested as resistance, broke above it, consolidating at or above it. So this would tell us there's definitely a possibility that Ethereum continues to gain value in comparison to Bitcoin if this plays out and potentially puts in a new all-time high or at least cycle high value compared to Bitcoin. So what does that mean? Ethereum continues to the upside while Bitcoin goes sideways or down. Bitcoin goes down faster than Ethereum goes down, or obviously they move opposite from each other. Bitcoin goes down and Ethereum goes up. So any one of those, once again, is a possibility, but it's very important to keep that in mind. This still, to me, until Ethereum breaks above 0.07742, roughly 0.08 Ethereum to 1 Bitcoin, 0.08 Bitcoin per Ethereum. Until we break above that, this essentially just looks like a high, a low, a lower high, a lower low, and then another lower high, which would most likely be followed by another lower low to come back down to the bottom of the channel, or the 200 exponential simple moving averages. So that's what I'm paying attention to on the Ethereum to Bitcoin chart. Let's talk about our shitcoins. Oh yeah. Uniswap. And keep in mind also, I'm not trying to hurt anyone's feelings. I obviously am looking at these shitcoins because I either am in active trades on them, just made active trades on them, or someone in the group requested it. So Uniswap did quite well here. Got all the way up to the 200 simple, found support right here, and is cruising back up, getting rejected at the key levels we would expect it to. Our previous support turn resistance. We're basically trying to push above this high right here. If we do push above that high right here, there's quite a bit of chop in this area, but we could very easily see a push up into like the, I'd say mid to high 30s, $36, somewhere around there. We are getting the hard sell signal and leaving the bullish control zone, but still have all green histograms. Here's a perfect example too of when we come above the slope line here, come back to it, it acts as support, and then we get continuation to the upside. That's what we're expecting potentially to happen whenever we see those lines about to cross each other. So Uniswap, I would say looking pretty good, but potentially topping out. Basic attention token underperforming, got back above 200 exponential, still has not made it up to its 200 simple. I would expect it eventually to claw its way back up to 80. If it can break up and above that level, I would say 88 cents after that, and then potentially as high as $1. It's going to be very, very difficult to get above $1 because it's a nice round number, and there's also quite a bit of resistance. Doggy Dogecoin, still not doing shit. Overall, much better than most charts as it is above its 200 exponential and simple moving average. Everything is positive on this. It has quite a bit of resistance right here at 30 cents. Once it gets to 30 cents, it is going to be extremely difficult to get through 30 cents. But if it does, we could start seeing it just go parabolic up to like 36, 38, 42. But we got to take this one step at a time because there is a shitload of selling pressure above our heads as well. Most of these people probably already got liquidated. Polkadot. Dot is an extreme underperformer. If I was like bullish on price action right now, I would probably buy into Polkadot because it has strong fundamentals. Technically, it has put in a new all-time high this cycle. Obviously, it's a newer coin or crypto. And then also, it's underperforming right now. So assuming at some point in time, money would flow back into it as it has not had a parabolic move like many of the other cryptos. Eventually it would at least come up here and touch its 200 simple, which is a key level of resistance based on this previous top here. And then of course also the support that we had here would act probably as resistance. So I think more than likely, if we get continuation to the upside, Polkadot between $27 and $30 would not be unrealistic, which is still quite a way up from where we're at right now. But again, it's not always good to buy weak stuff and assume that it's going to perform. It just hasn't gotten there yet. There's a reason this is underperforming. It's having trouble getting new money to flow back into it, as where some other cryptos are doing phenomenally. This one obviously bounced the Stochs right here, and now it looks like we're about to get the cross. Eventually, if we come down here below the 80 level, we'll get the hard sell signal as well. We do have multiple green histograms. We did bounce the slope line perfectly, like we were just discussing as well, and saw a continuation. Overall, looks weak in comparison to most cryptos. Chainlink. Chainlink, again, overall strong, went absolutely parabolic. It was one of the overperformers, an early gainer in these markets, but quite a bit of resistance to this level. Got above the 200 exponential, did not get up to 200 simple yet. 200 simple is probably going to act as a heavy resistance around like $28. Could easily overshoot it. We could easily see price action up here near 31 to like $34, $35. It's going to be very hard to get through this level as it was acting as resistance, 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 and then support here as well. So $35 is going to be tough, but next target to the upside, 28. But really, we just want to see this thing hang on, and it's probably going to do whatever every other crypto does. So XRP, you know, this thing has had one of the nicest charts short term just because it did so poorly the entire bull run. This one is a massive underperformer. It also has horrible fundamentals right now as it's involved with the SEC, as many cryptos will be in the near future. It was just picked out as a target because it was basically low-hanging fruit and easy to dominate. So it will probably pay some extremely large fee and then, you know, get out of trouble with the SEC. But the most important thing to factor in is we did not make a new all-time high this bull cycle. Is it possible we still do? Yep. But is it probable? Well, probably not, because it's had all this momentum and still couldn't get to an all-time high, which means the cult is dying. There's no new money flowing into this in comparison to the previous, bull run. So basically, all the people from the XRP cult, they quit the cult. they're no longer drinking the Kool-Aid, and then they joined other crypto shitcoin cults. So while XRP did have a very nice move right here, and the chart looks better than most because it's above its 200 exponential and simple moving average, it's at a very clear support flip resistance level right here, and obviously a very difficult level to get through, as $1 is a nice round number. If it does break through that level, we could easily see XRP up at like $1.30, maybe even to test these areas, 165. After that, 185. After that, maybe a new all-time high of $3.36. I'd say that there's a 95% probability XRP does not just all of a sudden put in a new all-time high, but it's still possible. So that's why I'm giving 5% possibility that XRP is not a dead crypto, but it probably is. Yeah, so not bad though. This candle is pretty nice. Definitely put in a nice move. I mean, this thing was at like 70 cents the other day. We got some purchases in here at the cross on XRP at 62 cents, and it went up here and literally almost doubled. So that is definitely a good little scalp, but let's not get greedy, and definitely don't want to join a cult. Although you could probably be the new cult leader because it's clearly dying. Cake, pancake swap. Again, looks decent, above the 200 exponential and simple. It's at our first target area, the 0.5 right here, $21. Next target would be the 618 retracement, 25.65. Clear resistance over here, clear resistance right here, or should I say support right here. Could it get up to 33? Sure. After that, potentially retesting new all-time highs. I think it's doubtful, but definitely a possibility. But we are definitely running into like the danger zone. Again, very nice move up here. Solana has broken through a very key resistance level. Basically this 236 right here in green was some tough resistance. Got through that. Obviously broke out of our descending pattern right here. Got that continuation. Nice candle coming in here. Took out that previous high right here, which is always nice. Next one we want to take out is the previous high, basically where we're at right now. If it breaks through that, there's no reason it's not going to just test the 786. $46. After that, $49. After that, new all-time high maybe, $58. But again, it's just going to do what all these cryptos are just going to do what the market does. So the most important thing to watch right now, in my opinion, is Bitcoin, Ethereum, and then pretty much any given shitcoin. Cardano. So Cardano obviously had a very nice move here as well. This thing obviously has liquidity issues because most of it is staked right now. So when sellers come in, you would expect the moves to be violent. When buyers come in, you would expect the moves to be violent as well. It is up here at a very key resistance level right there. If it breaks through that level, it's going to retest the all-time highs of like $2.30. If it breaks through that level, who knows after that? Blue sky breakout obviously stayed very strong above the 200 exponential and simple. I suspect that if you get up here, there's going to be some massive amounts of FOMO. Everybody's talking about how Cardano is going to be the new world reserve currency and Charles Hoskinson will be your Lord and Savior. Fundamentally, if I had to pick any one person on earth to be like, the creator and the smartest and most successful man in the world, that he creates the new world reserve currency, it's probably not Charles Hoskinson. I hate to say it, but let's not get too excited. Charles Hoskinson is a bum. So let's be real careful talking about Cardano as the new world reserve currency. Could it see a new all-time high very soon in the future? Yes, it definitely could. Will Charles Hoskinson probably stand above you and take a big dump right on your face? I would say probably yes. Bitcoin dominance came up here, got rejected at the 21. Looks like it's getting rejected below the 8 right here. If it continues to sell off here and does not find support, I would say this thing is probably going to head back down here to try to put in another higher low before it gets a move back to the upside. Obviously saw some resistance. Altcoins are rallying now. So what we want to see with this, if Bitcoin's going to move to the upside, we want to see it carve out a higher low than the previous low. Every other time this has happened, it did something very similar. Basically pushes up, sells back off, higher low, and then goes higher. Pushes up, sells back off, higher low, and then higher. Pushes up, sells back off, higher low, and then higher. Pushes up, sells back off, higher low, and then dumps. And then here we have, pushes up, sells back off, higher low, and then higher, and then dumps, and then pushes up, sells back off, higher low, possibly, and then higher. I mean, that's what the chart's saying, but we'll have to take the chart's word on it. And then crypto total market cap got that initial move back up here exactly as expected to the 1.776 trillion mark. Got a little bit of an overshoot right here, crossing the 821 back to the upside on the weekly. Next target to the upside would be 2.15 trillion. Looks like we're about to get potential cross back on the Stokes. Looks like we're flipping this back over here. We have a couple green histograms in a row. Typically, when the slope line flips back over blue, but we're below it, it's almost always ends up being a divergence signal rejection. So like 80% plus of the time when this flips back over blue, but the histogram is still below it, it ends up getting rejected. So according to this indicator, which I trust and use all the time and absolutely love, it's probably going to get rejected at a lower high and then sell back off. But who knows? Maybe Cardano leads and flips Bitcoin and then Ethereum, and then it's the new world reserve currency, and Charles Hoskinson actually is God incarnate. Maybe. I mean, there's a possibility, but I would say probably not. I think it's more likely that Vitalik Buterin is a robot, Charles Hoskinson is an alien, than either one of those two flip Bitcoin anytime in the near future. So, Riot Blockchain, and part of the thing with this like Riot Blockchain, Robinhood, and Coinbase is, in my opinion, there's just no reason to be involved in them right now, just because they're doing exactly what Bitcoin does, only worse. If you want to, like, this had a 61% move back to the upside. Bitcoin did more than that. And would you rather have Riot Blockchain or Bitcoin if they're going to do the same thing? I would rather have Bitcoin than like some mining derivative or fake ETF or whatever of Bitcoin. So in my opinion, until these things start doing something better, which you could argue that why would you want that? Why wouldn't you just buy some random shitcoin if it's going to outperform Bitcoin or Ethereum or something like that? And I would argue you're right. I totally agree. It is at a very clear resistance. It is underperforming pretty much everything, including Bitcoin itself. So there's no reason at this point in time to own it, in my opinion. Coinbase, same thing. Coinbase is trading exactly with Bitcoin. This was the top of Bitcoin. It has literally just sold off. And then from when it bottomed out here, it put in, 3 lows. Same exact thing Bitcoin did. And then from the bottom down here to the absolute tip top right here, it went up 37%. So you could literally own Bitcoin or any shitcoin and it probably outperformed Coinbase. So in my opinion, is there any reason to own Coinbase right now while it's directly correlated with the crypto market and underperforming? No. Nope. Why buy a loser when you can buy a winner? Will it one day change that? Yeah, I definitely think it will. Robinhood is next. Meme stocks. Robinhood looks like shit. Got the 821. Oh, we still got old indicators on this thing? What are we doing here? It's hanging on to the 50-55 here. Got the 821 cross to the downside. Trying to pull up out of the bearish control zone. Potentially get the hard buy signal. Multiple green histograms in a row. I mean, it's a meme stock, so you can meme it up. This is on a 1 hour time frame just because there's no history. Micro Sailor and MicroStrategy. Again, from, depending which bottom you go from to our top right here, 93%. Nice move to the upside. Would you rather trust, Michael Saylor and his random fake ETF, or would you rather just own Bitcoin or some, shitcoin? I'd rather just own a shitcoin. I think that there's way too much counterparty risk with Michael Saylor, the crypto slug. Although, at this point in time, got to give him props because he is no longer underwater or not underwater on his purchases. But if I'm right about technical analysis, that will probably change in the near future. But the rescue operation was a success. Good job, Kathy, Elon, and Jack Dorsey. You saved Bitcoin for now. GME, GameStonk, got the bounce off of our buy zone right here. Came up, could not get above the 8. Looks like it is just going to basically hang out at this level. Could easily get a nice little push back up to the upside. At which point in time, I would expect people to probably sell into any move back up. We have a very clear support that has been acting as support since back in March of 2021. And we're putting in basically just a lower high since then. I think eventually we break down, hit our next target level like $70. It's trying though. It wants to move back to the upside here. It wants to, but it's just a shit stuff. It's a shit coin. It's a meme stock shitcoin. AMC, they're accepting crypto now, so you can go to the movies and pay with your crypto. Yay! Oh, but nobody actually spends crypto. It's everybody just hodls it. So, and AMC is shit. It's a shit company. Oh, oh shit. Well, that's not good. That can't be good. So yeah, just basically gapped up because it was taking crypto now, and then just bearishly engulfed, and it's right back where it was. Next target to the downside, $25. After that, somewhere around like $18. After that, AMC is going to zero. It's a meme stock, not a hodl position. This is an actual company, so you can't just buy it and then just like hodl it and assume it's gonna like succeed. It has to actually do stuff, and it has like earnings and like, you know, important information. So unfortunately, just buy a random shitcoin crypto that has to not do anything and it can do well, not an actual company that has like numbers and has like real targets it has to meet, because the bubble's going to pop eventually when it fails to hit those targets. Bed Bath & Beyond broke down from key level. It's headed back down here eventually, bouncing at 200 exponential and simple. I expect it to retest the bottom of the range. Could it come all the way back up to like $38? Sure, definitely could. But again, shitcoin / meme stock. Newegg had a nice bounce up here as expected off of support. Came back up, found some resistance. Could not get above the 8 or the 21, getting rejected. I suspect it's going to come back down here to like $17, eventually down to $13, and then one day at $10.79. But we did know this was obviously going to be a very key support, and then the blue line was going to be a very key resistance. But as of now, the 8 and 21 across to the downside, and Newegg, it's a meme stock. It was literally worth $10. So after the meme runs out, it probably will go back down to $10. DraftKings had nice earnings, purchasing stuff and things, trying to carve out a bottom here, bounce back above the 200 exponential, got rejected at the 200 simple, got rejected at 200 simple, it's getting rejected again at 200 simple. If it consolidates here long enough, it could easily get a pushback to the upside like $56. But when we look at the longer time frames, what is really happening? Well, it got the 821 across the downside, got rejected a couple times. It's now back above it, trying to move back to the upside. If it spends long enough up above here, it gets crossed back to the upside, and it could easily go to new all-time highs. But at this point in time, it is still bearish looking. Oh yeah, made it through the meme stocks. What? Let's do our commodities, then we'll do traditional markets. I'm going to try to rip through these. We're at an hour 30 already, but real quick. Lazy Boy says sub 20K Bitcoin would be beautiful. Yeah, I mean, sure. But last time Bitcoin went to $3,000, nobody gave a shit about it. Last time Ethereum went to $80, nobody gave a shit about it. So if it goes below 20K, is anybody going to give a shit about it, or people are going to say it's dead? I mean, we'll all still do well off of it, but I think most people will probably give up. Art Kits says bull or bear, who cares, since there's money to be made either way. And that's how I know, Art Kits, you are a trader, not a hodler. And to that, my friend, I salute you. Lazy Boy says we can have a party when XRP sets a new high. Sure, we can have a party we can have a party on Mars when XRP sets a new all-time high, because it'll probably never happen. But maybe it will. Maybe it will. Mr. Lex says, nice work. Good to see you, Mr. Lex. Appreciate the compliments as well. So XAU, gold. Oh, look. What does this remind us of? Does this look like the Bitcoin chart? Gold goes absolutely parabolic after breaking out of a key resistance level. Oh my God, that's crazy. $1,300. Goes absolutely parabolic. Breaks down. Finds support at 200 exponential and simple. Puts in a series of lower highs. Breaks down from it. Flips the 200 simple, exponential moving average over red. Breaks back above it. Gets back above the 200 simple and exponential moving average. Everyone gets bullish on gold again. And then it fails. Breaks back down. Loses the slope on the 200 exponential and simple moving average. Then they start acting as resistance. Then it has a capitulation move back to the downside and retests the lows of the trend. What? Is gold literally just doing the same thing that Bitcoin's about to do, but ahead of time? Sure looks like it to me. Could gold find support right here and continue to the upside? Is this manipulation? Are they fudding our gold? Are they just trying to get our gold bars? Or is this just actual technicals playing out as they always play out every time. Yeah, it's probably the second one. Or it's just FUD because gold and space rocks. Let's look at the last time gold went on a bull run and see what happened and see why I think that the same thing that always happens is going to happen again. This was back in 2011, before most of the new technical analysts were even born, because they are children and have no experience in the markets. So let's see, we topped out, came back down, found support, put in a series of lower highs or double top, came back down here again, flipped the 200 simple and exponential to the downside, broke back above them, tried to find support, and then eventually lost them and went into a multi-year downtrend bear market where gold lost 45% of its value. But that's FUD, because inflation. So what's going to happen this time? Well, we sell off, put in a series of lower highs, double top, come back down, flip our slope back to the upside, try to maybe even come up one more time, and then sell off 45%. Where's that going to take us down to? Probably somewhere around $1,130, roughly. Does it have to happen? No. Is it likely to happen based on the exact thing that happened last time? Yes. But that's FUD, so we don't want to hear it. Also, we have our 200 exponential and simple moving average down here at $1,600 and $1,500. And we'll notice, obviously, the previous time we held support for a while, bounced back up here, eventually got rejected one too many times, sold back off, found some temporary support, and then continually blew through those. We noticed that they flipped over on the weekly. Red here, that was the 200 exponential flipping, and then here 200 simple flipping, and then eventually carved out a bottom right here, and then went into our bullish uptrend. So is that likely to happen again? Well, probably. Does it have to happen? Or could we be like closer to an area like this where we come back down, bounce, and see continuation? Sure, maybe we could. Maybe it could be something like this, and then we continue to the upside. Anything could happen, but based on exactly what happened last time, I'd say it's probably just going to happen again. So, but that's just technicals. Technicals are boring because they're provable and reliable. You know, it's more fun to just speculate with fundamentals. XAG, silver, obviously looks like total shit. The whole entire time it was on its uptrend right here. It basically never broke below the 200 exponential and simple, finally broke below the 200 exponential and simple, and now for the first time the entire trend we have flipped over the 200 simple and the 200 exponential to a downward slope. They're both red and angled to the downside. So what do we expect to happen? Obviously we already got a massive move to the downside, which we expected, but eventually we already hit $22 and some change. We're slowly just bleeding out. I would expect us eventually to come back down to like $21 and some change, and then eventually break down from that level as well. And then if we switch over to our weekly chart, we'll notice that this was not FUD. This was not manipulation. It was literally just people using their brains to trade based on an 8 and 21 moving average cross. So once we broke down and crossed the 821 to the downside, we saw a capitulation move take place. The capitulation move was initially bought up with the reaction rally, but eventually will probably come down to $20 or maybe even $18. So I hope you're ready for silver to be back in the teens. Sorry, silverbacks. Sorry, gorillas. Welcome to the real world. You paid what premiums? You paid how much over spot value? You know, the sad part about the silver rally is silver probably could have broken to new all-time highs, but the silver middlemen probably jacked up the prices so much that they killed supply, because the best thing to kill higher prices is higher prices. The best thing to kill demand is, you know, too high of prices or too much of supply. So if you have limited supply, increasing demand, but you raise the prices too high, you eventually kill the bull market. So looks like they probably did. So all these guys who are jacking up the prices, all these middlemen probably are the reason that silver got crushed and this didn't work. But in all reality, you know, what's taking place? Are we in an area like this? Are we just at the beginning of a bull run and we just got to come back a little bit? Could we break down below 200 exponential and then get picked back up to new all-time highs? Sure, we definitely could. But right now, it looks like on the weekly, we have crossed the weekly back to the downside. It looks like we're going to come back down here and test some of these key levels. Is it possible we bottom out at 20 bucks? I think there's a very, very high likelihood that we do. But everything is pointing to continuation to the downside. Wah, 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 wah. Wow. Gold silver ratio, obviously we've been talking about this for quite some time. We have a very clear downtrend here. We're coming back up trying to retest the 200 exponential and simple moving average as we did our previous time right here where we got rejected. Eventually we carved it out long enough and continued to the upside. But if we look at this on our daily chart right here, we had a very clear downtrend. We are still in the downtrend, but we have now crossed back above the 8 and 21 are green. The 200 exponential and simple are below us now. So if we stay above them long enough, the slope will flip back over. We will continue to get this move to the upside. Do I think that this is just going to go to new all-time highs? No, I think more realistically, we are just in a downward pattern and that we're going to get a measure move breakout, take us up somewhere around like 90 silvers per gold. And then we're going to continue to the downside over a longer term time frame. So, yep. But you guys have probably heard that from me many a time. So, platinum basically sold off, got the cross below the 200 exponential and simple, slope to the downside, looks bearish, got the reaction rally bounce off of the 382 from the low to the high, bounced it literally exactly. Oh my God, Fibonacci works. Maybe we come back up here to 1,092, $1,100, at which point in time we probably get rejected and head lower, somewhere around like $878 or even lower than that. Possibly as low as $800, but I am definitely looking to be a buyer of the fatty platty down there. We are seeing right now some bullish divergence taking place on our indicators here. Not so much over here, but definitely a little bullish divergence between these points. We could easily come back up, get rejected, go lower, put in a third drive of bullish divergence, and then bottom out at like this level here. So definitely paying attention to that, but right now overall bearish. First Majestic, same thing, broke down below the 200 exponential, the simple, they're rolling over, they're pointing to the downside. This thing looks like it is going much lower, much lower. Could it easily rally like this, get back on top, and then continue to the upside? Definitely could, but right now, there's nothing on this chart that tells me that we should be buying First Majestic. Silver junior miners look even worse. We have already gotten the 200 exponential and simple cross to the downside, try to cross them back to the upside. Could we get a reaction rally back up here to put in a new all-time high and attempt to save these trends? We could. Did it already happen? Maybe it did. Nothing in this chart is telling me this is going to be going higher anytime soon. We're getting a hard sell. Looks absolutely terrible. USAS looks much worse. Absolutely horrible. I expect this to continue just selling off and bleeding out. It is trying to hammer out a bottom right here, but I just do not see anything right now that tells me that this is done selling off. There is once again a little bit of bullish divergence taking place between some of these points right here. We are above the slope line, but I want to see at least the 821 on the daily cross back to the upside, at which point in time it could easily run back up to like $2. But in order for that to ever happen, we need these to cross back over green, and we can't even get above the 8 right now. So this was our attempt. It failed. So let's wait for our next attempt and see if that succeeds, or more likely than not, probably just fails again. Tilray broke down below the 200 exponential. 200 simple is rolling over. We're trying to cross the 821 back to the upside, getting rejected right here. Again, looks like it is getting ready to go much lower. Lost this support level right here. Tried to carve out a bottom. Failed. Where does it go down to next? Just going to keep starting to hit these lower targets. I think this thing's going to be $10, maybe single digits very soon. ACB, Aurora, again, the 200 exponential never even crossed. Yeah, we never even crossed the 200 exponential back to the upside. Like for a split second right here, 200 simple, tried to cross back to the upside, still powerfully angled to the downside, trying to carve out a bottom here. Nothing in this chart right now tells me that it's just going to all of a sudden burst to the upside. Is it possible? Yes. But before that happens, the 8 and 21 on the daily at least need to cross. And right now, we're getting rejected off the 21. So if it crossed back to the upside, I will probably take another scalp move. The last scalp move, that we were involved in was like over 30%. I know everybody was extremely bullish and then we were going to go to the moon. But let's be real. If you took profits, you have 30% more money than you did before, and the price is back at the bottom again. So that's why we're traders and not hodlers, no matter how much we think fundamentals matter. In the end, it's just technicals. All we care about is making money. CGC, Canopy Growth, the worst of the worst, the dirty girl of pot stocks. 200 simple is rolling over now. 200 exponential has been rolled over. This looks absolutely terrible. By far the worst. Are we coming back down here to $14? Probably. There's quite a bit of support here as we chop sideways for so long, and it is trying to show some strength here, but again, it got rejected off the 21. Until this crosses back above and gets a 821 cross, it looks like total shit. Total and utter shit. If it breaks back above though, 20-something% scalp to the upside and possibly an amazing entry. But again, why get involved in something until it gives us a reason? We're not going to. Uranium, URA, uranium ETF, again, looks like shit. 821 cross to the downside. We've been out of this thing for a while. If it can cross back to the upside, I will potentially take another scalp or entry, hoping that it is carving out a bottom right here. But again, commodities look very weak right now. The commodity play was great. We all got our fill. We all made a lot of money on commodities. But right now, it's telling us that that trade is done with. Could we easily come back down here, cross back to the upside, and enter into a nice trending trade? We 100% could, but what needs to happen before any of that? Well, we need to cross the 821 back to the upside, and we are not doing that. So, UEC, Uranium Energy Corp, we are now below the 200 exponential and simple. If we stay below here long enough, they're going to roll back over to the downside, and then this thing is going to go into a long trending downtrend. And again, if this finds support right here and the 821 cross back to the upside, by all means, I will enter into a scalp with a target of $2.50 or $2.70. A nice potential gain up here, somewhere in the 16 to 20+% range, or possibly an entry into the bull market. But right now, we're seeing no signs of life. Well, very little signs of life. CCJ, Chemical Corp, again, uranium. Same thing, same exact chart, trying to cross back to the upside. Probably has continuation to the downside, but it's trying to hammer out a bottom here. Probably will fail. If it doesn't, we will see this turn green and we'll scalp it again. URNM, North Shore Global Uranium Mining ETF, same thing. Looks like trash, continuing being trash. This looks like a dead cat bounce. Looks like we're going to get rejected here. If it crosses back green to the upside, I will probably scalp it back up to somewhere around $60-something, potentially up to new highs, but I doubt it. Copper, same thing. Got to bounce back up here. Reaction rally off of the 1.382. Still has a nice measure move to the downside. Still has 200 exponential and simple below it. Could easily go down here. So like $25. Again, I'm massively bullish on copper. Infrastructure, all that good stuff. But let's be real. The infrastructure bill is going to get held up. Economies are not doing nearly as good. Around the world, China, India, United States, as we're led to believe. All this is priced in. They had a massive run to the upside. We broke down from a key level. So more than likely, we're going to come down here and retrace to one of these other key levels. Lithium, still pumping up here to the upside. Pump it up. Got almost up to the 1.5, still consolidating. We're very close to our target. I do expect this to top out at $91. If it goes to 91, maybe it goes to 100. If it goes to 100, maybe it goes to 110. I don't know. I'm still in this trade for now, but it's at dangerously high levels in my opinion. This hydrogen one, still just chopping around. HYDR. I like this thing long term. Maybe if it finds support here and starts continuing up, maybe it goes to new highs. It's very new and has very little price action. But at this point in time, it's basically just putting in a series of lower highs and lower lows. Lumber, breaking down from that key level here, tried to carve out a bottom, putting in potentially triple bullish divergence. So if it carves out a bottom right here, flips the slope line over blue, we have 1, 2, 3 drives of bullish divergence. But when we flip to the longer time frames, it looks terrible on the weekly, losing the 200 exponential and simple. Spends enough time underneath here, it's going down to $381. And we flip over to the monthly. You want to buy this falling knife? You want to buy this knife? I'm buying the knife. I'm buying support. I'm buying the knife. I'm buying support. I'm buying the, oh my God, and I'm broke. So maybe we'll just wait. Hard sell signal, multiple red histograms, looks like shit. Very clear target down here, $383. So probably going to go there. Probably headed at 383. Call it 400. Caterpillar getting a nice bounce up here off the 200 exponential and simple moving averages, off of our key Fibonacci levels. Definitely has some potential to push back up here. It is at resistance right now. It is crossing the 821 back to the upside. Infrastructure, hooray! Could it come all the way back up here and put in a new high? It definitely could. Is it more than likely going to get rejected around 226 or somewhere around there and then roll back over, put in a lower high, and then continue to the downside? I would say based on actual technical analysis, that's more likely to happen. Deer is back up here at new all-time highs, or retesting previous all-time highs. Again, it's not uncommon for something to break down from a key level, come back up, put in a new all-time high, even see continuation, but eventually fail. Will this act as resistance? Damn it. Is that right? Did I do that right? Yeah, looks right. Looks rightish. We got to look at the resistance level, basically attempting to get back inside the channel. We have obviously that previous all-time high resistance. Could it easily just pump straight up here to like $450? Sure. Because infrastructure and farms. But we did get the 821 cross back to the upside. We are still very powerfully above the 200 exponential and simple. This thing was showing tons of strength even after the breakdown, and then put in a higher low right here. So it's not unrealistic to think it's just going to keep pumping up here. But honestly, I think most of the infrastructure play is probably already priced in. It's probably going to be months before Pelosi even lets the infrastructure bill go through. And then even after it does go through, only a fraction of the money even gets spent on actual infrastructure. The rest is social infrastructure, or what I like to call or abbreviate as socialism. Intero midstream, AM, again, like water purifying infrastructure play. Hooray, energy, water, crops. Let's do it. Looks weak. 821, cross to the downside, finding some support here. I mean, maybe this pumps back up. Again, long term, I think this does well, but right now there's just not reason to get bullish on it. CX, SEMEX, same thing. 821 cross, just chopping up here at, very elevated levels. Broke down from key support, our channel right here. I think more than likely than not, it's coming back down to the bottom. Could it come up here and put in a new all-time high? I mean, sure, it's part of the infrastructure. Hopes and dreams. CLF, Cleveland Cliffs, steel company. Again, all these steel stocks are doing well. It's obviously based on the infrastructure trade and all this good stuff. Came back up here, put in a new high. Not a new all-time high, but cycle high. It's back inside of the channel right now. So as far as I'm concerned, it has regained key levels and could see continuation. You guys know that if it does see continuation, my next target to the upside is $28. After that, $34, $35, somewhere around there. But, I think it's just a matter of time on a lot of this stuff. These trades are just, everything's a fad right now. It's like, oh, infrastructure's a trade, stay-at-home's a trade, technology's the trade. But you can see slowly but surely the chairs are just coming out of the market, and eventually the music is going to stop. But this is what a melt-up looks like. We start to see more and more concentration taking place on fewer and fewer stocks until finally, Ford, still looking good here, still strong. Got to be careful here, though. Again, it has broken down from this key level, trying to just reclaim it. I am down to a small position in Ford at this point in time, and it's more of just like a hold long-term position. I still think it comes down lower, though, but scalp-wise, I'm just not seeing what I need to see out of this. If the 821 cross back to the upside, maybe I will re-enter with the target of a new high. GM looks even weaker. The 821 cross the downside. Looks like it's getting a reaction rally off the 200 exponential and simple. Again, looks very weak. Broke down from our channel. Looks worse. Hasbro broke out from that key resistance level here, trying to push up here. Could not maintain it as support. Once we lose a key resistance that should be acting as support, it's hard for me to get bullish. If we would have maintained this level, I probably would take a scalp to the upside for continuation. But at this point in time, it looks like we're just going to sell back off here. This looks like a reaction rally off 200 exponential and simple. And I think we're going to come back down here, retest them, and then probably head back down to the bottom of our channel, somewhere around like $90. So works. This one looks like it may be trying to turn around a long trend to the downside and is a potential trade that I'm looking at for a nice little scalp here. It has obviously been just literally dying since 2000 and the end of 2016/17, it has literally just been capitulating down from $100 all the way down to about $1. So it literally lost 99% of its value. So it's hard for me to get bullish on something that lost 99% of its value and just been putting in steady lower highs and lows. But is it possibly carving out a bottom here finally? Possibly. Is there a scalp trade potentially in play here for like a 100% move back to the upside with a 11 or 12% stop loss? It's on the chart for a reason. I'm looking at it. I have not entered into this trade yet. This is a fairly bearish candle right here, but we are potentially, if this is the bottom, at a key fib level. If we find support right here, we could easily have a very parabolic move to the upside. It looks to me like it's trying to carve out a bottom. We're seeing the blue slope line. We saw it quite a few other times. We have exited the bearish control zone. We have crossed the 821 back to the upside and are starting to push up here. Could it easily get back up to like $7 from the $3 it's at now? Sure. Could it just continue to the downside? Also sure. So definitely paying attention to this one, not just jumping in on it yet, but I like to buy things when they're on sale, not when they're at all-time highs and extremely overvalued. Another one, just been getting absolutely shellacked for years upon years upon years. All-time high was back in June of 2014. This is the Sphere 3D Corp. And then from that point in time, sold all the way off to 32 cents. So it got absolutely decimated from $2,259 to 33 cents. So is it dead? I mean, it was very close to being dead, but is it possible that now, for the first time since then, it is now flipping this trade back to the upside? We see the 200 exponential and simple with positive slopes. We're attempting to push up here. I am looking at a potential entry point, at least to retest some key Fibonacci levels and this key resistance level here. 200% potential move to the upside with a 26% to the downside when we come back down here and retest some supports here. Does it have to happen? Could we go down lower? Am I going to just jump into this trade the second we get down low? No, we're probably going to consolidate here for a little bit. If we start to see some strength though, I'm going to start really looking at this for a potential short-term move. We basically broke above the 200 exponential moving average, came back down trying to find it as support. If we consolidate here long enough on the weekly, I do expect this to play out to the 382, after which our next target would be the 0.5, $27. We're currently at $4. This thing could definitely have some nice scalps in play, but it could easily just continue to capitulate back down. Could it go to zero? Well, probably not. Somebody would probably just buy it, or they would just use it as a SPAC or something like that. So Weight Watchers had a nice move down here to a key level. If we look at our longer time frames here, we can see that Weight Watchers has basically just been consolidating. It looks very weak, but we did put in a low right here. We have a low right here on the monthly, a low right here on the monthly, and then we sold off down here to that same low again. We're basically bumping our head on the 200 exponential and simple moving average, trying to get above it. We are putting in lower highs, but we're also putting in, potentially higher lows right here. This also is a key support area that I'm paying attention to. Bunch of green histograms. When we switch to our shorter time frames, the indicator oscillators look bad because it had this big move down here because of its poor earnings and whatnot. But this is, it's been around for a long time. Do I think Weight Watchers is just going to go away? No. Is it a great trade right this second? Well, no. It looks like it's getting rejected off of its key moving averages. But if it finds support right here, there's definitely some potential for a move back to the upside. It's at $24 right now. It could easily come back up here and retest 32, 40, somewhere around there. So there could be a potential scalp in play on this bad boy. But yeah, just paying attention right now, watching it to see what happens. Going to wait for some kind of confirmation. Does it start to grind out a bottom right here? We saw obviously quite a bit of volume, and then this got bought up fairly aggressively. Could it easily just bleed back out? Sure, and lose this area as support. Could it easily just overshoot it and then regain it later? 100%, definitely could. Right now it looks like shit, but in the future may look decent. So yep. All right, grinding through here. What are we at? 1 hour and 53 minutes. Okay, making good time. Making good time. Lazy Boy says LOL. I'm not sure what you're laughing at, but it was probably pretty funny or very sarcastic and also funny. TLT. Oh wait, we already looked at this. VIX, volatility index in the house. Just grinding down our channel right here. Nothing to look at here. Essentially just looking for a little more continuation. We are inside the bearish control zone. We have crossed back to the downside. I'm looking for it to find some kind of support around the 14 range, and then eventually just another in a series of lower highs. But this will correspond with probably some violent moves in the stock market. So I'm expecting those around the time when that bottoms out. Dow Jones, another new all-time high. Oh my gosh, I'm so surprised. I can't believe Dow Jones is still going to the upside. Oh my gosh, it's almost like we're in the middle of a melt up. We have almost hit our target at the 1.382 at 35,600. Next target after that is the 1.5 at 37,667. After that, the 1.618 at 39,898. And if we go to our longer term time frame, we can look at our 2.618 target and where I expect this bull run to potentially top out after a parabolic move to the upside of Dow, roughly high 40s to low $50,000. I think we could easily get up to $52,000 before having a massive capitulation move to the downside. What am I basing that on? Well, just basing it on the last 100-year trend. Sideways channel, break out of the channel, parabolic move to the upside, and then capitulation move back to the downside. So do I think we go parabolic here after we confirm a break of resistance? Yep. What am I basing that on? Technical analysis. So, yep. Dow melt up. Do I think it's going to stop anytime soon? Nope. Would I expect it to stop at one of these key Fibonacci extension levels? Yep. Weekly looks kind of weak too. We got to be careful on that. SPY, again up here, new all-time highs. Oh my gosh, that's crazy. I can't believe it. What? No way. Yep. New all-time highs, of course. And are they going to continue? Yep. Right up until they don't. We are up at the top of the channel. We are squeezed into a very tight little range right here. We are seeing quite a bit of weakness and bearish divergence on our weekly chart. Do I think we put in a new all-time high tomorrow or sometime in the near future? Yes, I think we do. Until we don't. But until then, I'm trading with the trend. And the trend is up. This is definitely a stock picker's market though. NASDAQ showing a little more weakness right here. Obviously as rates go up, the tech stocks will start to lose a little momentum, but we have a very clear support right here. We are still hanging on to that support. If we break down from that support, I would expect a retest of 14,150. If we find support for long enough, I would expect the remainder of our measured move of the pattern right here playing out with a target of roughly 15,750. All right, NASDAQ. All right, so let's look at the Russell now. Is the Russell the canary in the coal mine for what's really happening in the markets? Yes, probably. Showing a little bit of strength right here. Basically just been going sideways since, well, the entire year. Since 21 started. What's going on the weekly, though, that has me thinking Russell is about to take a big dump? Well, it looks like we're potentially going to lose this level. We were able to push back up today and sort of like save this level. But the weekly is very close to potentially getting the cross to the downside. If we cross below $2,228, I will get very bearish on this. We have lost the slope line. It's been all red histograms this whole entire time. If this thing falls out to the bottom, it could really, could get absolutely crushed. Is it going to happen? Probably not. We'll probably just melt up. It's probably just waiting its turn in line. But the Russell is obviously the shittiest, but it did get the cross back up here. So is it going to come back up and retest the same exact area it's been retesting over and over again? Yeah, it's probably headed back up to somewhere between where it's at now and $2,350. Am I interested in the Russell? Nope. XLB hit our measure move to the upside, hit our target to the upside. Obviously, the percentages are not going to get you rich, but the materials are starting to strengthen, attempting to retest those previous, highs right here. We obviously have strength building. The 821 have crossed back to the upside. Everything looks bullish here on shorter terms. That is good to see. XLC communication sector still strong right here, consolidating and probably going to be continuing up to new all-time highs again very soon. XLE energy, trying to find some support on the 200 exponential and simple. The 821 are still crossing the downside. Looks very weak, trying to regain this level and move back up here to the upside. Probably just waiting on oil to do what it's doing. And as far as I'm concerned right now, oil is just retesting its breakout of resistance. XLF financial sector, new highs right here. Obviously, the cross right here and gaining strength. This is, I mean, this will move probably with interest rates. As rates go up, and potentially rate hikes happen at some point in time. Would I expect banks to do better if there's actual interest rates and they can lend money and make money off of the money they're lending? Yeah, I mean, that's like literally their business model. So do I like banks though? No, I think they're total shit and they will be gone sometime in the near future. Decades. It could easily continue putting in new all-time highs. Until then, XLI, industrial, retesting the highs right here at the top of the range. Very, very high levels. Was this just a bullish consolidation before a breakout to new all-time highs? Probably, but we are extremely close to what I would consider to be the potential top for this run, which is around like 116 to 120. So is there still 20% move on the bone? A little meat left on there? For sure, but we are very close to the top of this range and very far from the bottom, so I'm not really interested. And when we really zoom out and look at this chart right here, really tells you that we just don't want to be interested. I don't want to be involved for this. I don't want to be involved for this. And here we are at the top of a channel that we've been operating inside of for the last over a decade. So if we're at the very top of the channel, do I want to be involved in the next one of these? Nope. Does it seem very likely? If we're at the top of the range? Yeah, probably. So I don't want to own this when it comes back down from 120 to 60. So XLI, no thank you. Does it put in a new all-time high soon or a cycle high? Yep, probably. XLK. And you can see a very clear trend like shift between these things. Tech looks like it's getting tired here at the highs. Starting to roll back over. Hanging on. Trying to hang on. There was obviously some very clear bearish divergence taking place. Looks like it wants to roll over pretty badly. Obviously, that would have a inverse correlation with rates. As rates go up, things with extremely high valuations tend to go down. So tech has extremely high valuations. One might say astronomical or fantasy valuations. So it's probably going to get crushed if rates continue to rise. But if it reverses and bonds go up and rates go down, I think tech will just continue to melt up. XLP, consumer staples, at the new high here, starting to put in our measure move, starting to look like a little bit of a rejection candle. Could it easily still make it up here to like 73, 74? Yep, probably. Still showing strength, still well above 200 exponential and simple, still looks good. XLRE, real estate looks toppy. Put in a new high here. Damn near got to 1.236. Got to break out of these levels. It's below the 8. If it stays around this area too long, the 821 going to cross back to the downside, and this thing's going to start to put in a temporary retracement. Where is that going to take us down to? Well, probably this high. Probably come down here and retest this previous high, which obviously not good. Definitely some bearish divergence taking place. Does it just capitulate from this level? Well, stay tuned next week to find out. Excuse me. Hopefully I didn't just do that while it was unmuted. I think I got it in time. Little cough. A little bit of that Rona resurgence. Hopefully not, but probably yes. XLU. Utilities. Back here. Retesting those levels. That safety trade. Our trade is playing out very nicely here. Obviously very close to hitting the target. So we'll be rich with a 9% gain. Hooray! No. More importantly, though, probably just going to retest the heart line. Looks strong-ish. Looks horrible on the long term. Decent on the short term. Retail. Trying to carve back out to this new top. Trying to get that breakout. Trying to get that ascending triangle. Trying to get that measure move. You could say, I mean, this thing's been going sideways forever. Is it just going to keep going sideways? Probably. Could it break out here one day? Maybe. Maybe. Damn, what the fuck is going on? Been a while since I restarted. Maybe my computer's getting pissed. Or maybe it's just TradingView being a piece of shit. I don't know. XLV, select sector. Basically hit our target perfectly, 2.618, starting to sell off here. paying attention to if we get that 821 cross back to the downside. Looking probable right now. I mean, it hit a nice key level though. You'd be crazy not to take profits here. Wow, I don't know what the hell is going on. Might be calling this stream a little early. I don't know what the hell it is. I don't know what is going on here. I'm assuming it has something to do with the browser situation. I don't know if you guys can still hear me right now. My actual computer appears to be operating perfectly fine, but for some reason the actual browser itself is not doing anything. Probably because I have 4,000 windows open and I have updates that need installed, and I have not rebooted my computer in weeks. So I guess maybe I'm overdue. I guess we'll call it there, as I don't seem to have anything functioning. I have some charts for tech stocks I will post up in the Discord group. But yeah, I don't know what the hell's going on, but obviously cannot continue to do technical analysis if the browser is not functioning. Or TradingView. I don't know which one it is, but either way, it's not working. So gonna call it there, guys. Hope everybody has a good night. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Everybody have a good evening, and I will try and reboot my computer more often. But honestly, it's definitely the browser, because you guys can still hear me. Everything is still operating, but for whatever reason, the browser is not doing well. So I guess having like 200 open tabs is probably not good if they're all full of math and not doing updates. So everybody have a good evening. It's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Have a good Wednesday, and we will see you guys on our next live stream at Sunday from 8 p.m. till 10 or 11, depending. Feel free to leave any asset requests or questions in the comments. Make sure you like and subscribe if you're not already. And if you're interested in joining the Discord group and getting access to the brand new indicator, the TJD Master, my new personal favorite, I highly recommend it. Join the group, get the indicator for free. Holla, crypto trend trader, and I'm out of here.